It is 5 a.m. in New York City. Good morning. I'm Lizzie Burden with your Bloomberg Brief in for Danny Berger. Here's what you need to know. More tariff tension. President Trump threatens a 35% tariff on Canada, along with blanket levies of 15 to 20%. Retreating from a record, US equity futures slipping as the president ramps up his trade agenda. And preparing for an announcement, President Trump plans to make a major statement on Russia on Monday as he mulls sanctions on the country. Well, the game of chicken continues. You had the S&P hitting another fresh record yesterday, thanks to partly those Delta earnings better than expected. But the president caught wind of that, and he's escalated again when it comes to trade. The tariffs on Canada, but also raising that global tariff. Now, yes, we've got Wall Street futures lower this morning. We're down 0.5% on S&P E-minis. But how long is this negativity going to last? We heard from JP Morgan's Jamie Dimon saying this market is complacent. So how long before it's egging the president on again? Take a look at your Treasury market as well. Yesterday we had yields up higher across most of the curve. That 30-year bond auction going off pretty much without a hitch, despite the tariff concerns, despite the concerns about the deficit. And when we look at euro dollar, we're down again today, down at 116, because on the flip side, the dollar is reprising its role as a safe haven. How long does that last? Keeps on happening this week. Let's get to Joe Easton. He's got a few of the pre-market movers for us. Joe, what are you watching?
Morning, Lizzie. So we've got a big jump in Levi Strauss following the company's earnings report after the close of trading yesterday, beating expectations, and analysts saying there is further to run in terms of where the earnings are going to go. This is all about the head-to-toe denim fashion, which I always thought was a bit of a faux pas, double denim. But what do I know about fashion? It is doing well for Levi, boosting that stock. We're up 7% today. Then in terms of drone stocks, these ones are also in focus, getting a bit of a boost today as Trump and Hesketh look to ramp up production of drones and usage, cutting back regulations on the sector, making them more popular. So we're seeing boosts for Red Cat and also Kratos, a couple we had pulled out today. Then finally, one more to bring you back here in Europe and back in the apparel space. Weakness in the Gucci owner Kering as analysts at both Goldman Sachs and Bank of America issue warnings on the luxury goods sector. BofA saying it's worried about the outlook for earnings in luxury. And as usual, check out the Before the Bell opening wrap for a summary of all these news movers and more, Lizzie.
Don't trust you to bring up a Canadian tuxedo on a day when Canadian tariffs are in focus.
It's on brand. It's, it's in vogue at the moment, Canada.
Thanks for not wearing it today, though. Joe, we'll see you in half an hour. Now, in just moments, we're going to be speaking to Henry Allen of Deutsche Bank on his read on the risk to markets. And then we'll be speaking to Lindsay Newman of GZero Media to talk about the current geopolitical risk landscape. But first, let's focus on these markets. The S&P 500 hitting another fresh record at yesterday's close, despite investors remaining cautious over President Trump's trade agenda. Joining us now is Henry Allen, macro strategist over at Deutsche. Morning, Henry. I don't know what you make of this, but JP Morgan's Jamie Dimon says this market is complacent. Maybe not this morning, but in general, as you look at all of these fresh records, is he right on the S&P?
I would push back against that slightly, actually, because, yes, markets are facing an array of risks this year, whether that's tariffs, fiscal policy, geopolitics. But actually, if you look at the macro fundamentals, they remain in a pretty good place. Yes, of course, we had Liberation Day, and there were those widespread fears that the US might be about to plummet into recession. But then, actually, if you look at the data since then, we've had 3 months of payrolls, and all have been in the 100 to 150,000 zone. So no sign of a recession at all. Indeed, that resilience has been pretty remarkable. So on one level, in terms of the economic fundamentals, it's justified. And then if you look at the fact that policymakers have repeatedly shown that every time there's market turmoil, they will dial things back, and we've seen that with Trump consistently in both his first and his second terms, then I think there's a fully justified reason why markets are trading at these levels.
So basically, markets will be the guardrails on the president, I feel, is your argument here. But look, Dimon's also warning that the inflation hit is coming. It may not be here yet, but it is coming. And he says that the Fed is going to hike. There's a chance of that by 40 to 50% hike, not cut. Henry, what's it going to take to trigger that scenario when it comes to the effective tariff rate chosen by the president?
I think there's a pretty high bar for the Fed to hike in this sort of environment for several reasons. One of which is that they have, of course, said that their aim is to cut for the time being. Indeed, they still penciled in 2 rate cuts in their dot plot by the end of the year. So the first step, if they were to become more hawkish, wouldn't be to hike. It would just be to hold policy for longer. And then, of course, at the same time, we need to remember that there is an increasing amount of political pressure on the Fed not to hike. And they know that if they were to hike, then that would only increase that pressure and incur Donald Trump's wrath. So, you know, from a political standpoint and from an economic standpoint, it's difficult to imagine that inflation gets to a point where they would want to be hiking rates, at least in the near term, particularly when you account for the fact that several Fed speakers have said that they still think policy is in slightly restrictive territory.
So speaking of that political pressure on the Fed to cut, I was speaking to Frank Munkham yesterday, and he said that, ironically, that makes the bar higher for the economic evidence to justify the Fed cutting. Do you agree with that?
I do, actually, because from both an economic and a market standpoint, the Fed will want to prove their independence. They don't want to seem as though they're like the central bankers of decades past who caved into political pressure. And yes, that might have been a brief short-term boost for growth in the short term, but in the long term, that actually made things worse, particularly with inflation getting out of control. That's been the mistake of central banks at several points in history. Indeed, it's why politicians actually gave central banks independence across many countries, because there was a recognition that when politicians interfered in interest rates, they tended to set them too low.
And so there's a higher bar for the economic evidence. But on top of that, we've had the deadline delayed by 3 weeks for tariffs to August 1st. It's going to take even longer, surely, to not just see the inflationary impact of tariffs, but settle the debate on the FOMC about whether this is transitory or persistent. Surely that pushes back when the Fed is going to cut from September.
Well, I think it will hinge on a couple of things. I think, firstly, this coming week's CPI print from the US is going to be really important, because if the inflationary impact of the tariffs does start to show, then I think it's in this print that we'd start to see it. Because, of course, even though Trump did push back the reciprocal tariffs by 90 days, that 10% baseline was still in place throughout that period since April. So if we're going to see the impact of the inflation on the data, it's actually this next week's report where we'd start to see that. So if we see inflation ticking up, then I think that certainly raises the bar for a cut anytime soon. And then I think the other factor we've, of course, got all on our minds at the moment is what does happen on August 1st, because, yes, Trump has said that's the new deadline, but then we've seen U-turn to the administration before. We saw, after the original Liberation Day on April 2nd, Trump said, my policies will never change, and it was only 5 days later that he then executed the 90-day extension. So it would be entirely in keeping with what we've seen so far if we were to get another extension. I don't think that's guaranteed, given how many extensions there have been already, and we have indeed been surprised in both directions. But clearly, I think that's very much in doubt right until the final hours. We saw back in February, actually, when Trump threatened 25% tariffs on Canada and Mexico. Those were postponed with just hours to spare. So I think we won't have a good sense of that until August 1st itself.
But Henry, you've noted that we're approaching that time of year when crises do blow up. You reminded me in your notes that this is the sort of time of year when you had the yen carry trade unwinding last year. Liquidity is thin. What sort of event would trigger a similar sort of crisis this year?
Well, I think there's a few candidates. I mean, one, of course, is that August 1st deadline on the tariffs. Another is if the inflation print comes in hot and then markets price out the rate cuts. I think fiscal fears are very prominent as well right now. We saw that in the UK last week when Rachel Reeves' position looked under threat, and in particular, markets weren't so concerned about Rachel Reeves. What they were concerned about was this idea that a new Labour Chancellor might ease the fiscal rules, which basically is code for borrow more money, and markets, particularly bond markets, weren't a fan of more issuance and higher national debt. So if there were some moment like that again, it could be in any country. Indeed, we've seen a lot of fears in the US, France, Germany and other places with long-end yields pushing higher, then I think some kind of fiscal event like that could cause real difficulties if something transpired over the summer. And
just finally, Henry, you're looking at euro-dollar down about 0.8% so far this week, the dollar up again in these uncertain times. Have we gone a bit too far with the dollar weakness narrative?
I think to some extent it might be a bit overplayed in the short term, but I am sympathetic to the idea that the dollar will likely continue weakening, because the problem that the US has at the moment is there's just this chronic policy uncertainty that isn't going away. You know, with the tariffs, we're kind of at the point where it's like we're on season 27 of some long-running TV series, and if you haven't been following right since the start, then you've kind of lost the plot by now. And as long as this uncertainty keeps persisting, then I think that's going to raise doubts about the stability and credibility of US policymaking. And that may not be an instant thing, that may be a slow thing that happens over time. But as it does, then I think that is going to take some of the support away from the dollar. I don't think that's going to be a huge move. I don't think the status of the reserve currency is coming under threat, but certainly do I think more weaknesses in the pipeline? Yes, I do.
Really not a box set I want to rewatch, Henry. Allen of Deutsche Bank, thanks so much for ending the week with us. I hope you have a great weekend. Now, to other stories trending on the terminal this morning. The UK economy shrank for a second straight month as companies and consumers struggled to bounce back from US tariffs and tax increases. GDP declined 0.1% in May, according to the Office for National Statistics, and Chancellor of the Exchequer Rachel Reeves said that the latest figures were disappointing. Elsewhere, Brazilian President Lula da Silva insisted that Brazil can survive without trade with the US and will look to other partners to replace it. This comes after President Trump threatened 50% tariffs against the nation. The US is Brazil's second largest trading partner, following only China. And New York City Mayor Eric Adams raised more than $1 million for his re-election effort in a single night at a fundraiser in Manhattan. His campaign has gotten a boost from donors and business leaders opposed to Democratic nominee Zohran Mamdani. Michael R. Bloomberg, the founder, of course, and majority owner of Bloomberg News parent Bloomberg LP, has endorsed Andrew Cuomo. Well, coming up on the programme, Trump doubles down on his tariff regime. We're going to dissect the latest salvos next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in New York. Now, this week has been dominated by tariffs, and President Trump's added further fuel to the trade war fire by threatening a 35% tariff on Canada, as well as floating the prospect that he may raise rates even higher. Now, let's bring in, for the latest, Bloomberg's Kasia Klimasinska in D.C. and Min Lo on the ground for us in Kuala Lumpur. So, Kasia, I'm going to start with you. We've got this Canada tariff threat, 35%, but how much does USMCA actually buffer the impact of that?
Good morning. Indeed, here in D.C., we hear about new tariffs pretty much every day. And yesterday, President Trump announced this new 35% tariff on Canada. But indeed, it's only on goods that are not included in the trade deal between the U.S., Canada, and Mexico, the USMCA trade deal. And also some energy goods are excluded. So there might not be a big impact from this tariff, and anyway, it doesn't kick in until August 1st. But of course, the number is significant, and it's coming against one of the key trading partners here for the U.S.
And meanwhile, Min, U.S. Secretary of State Marco Rubio has been meeting his Chinese counterpart Wang Yi on the sidelines of the ASEAN talks in Malaysia, where you are, where tariffs are really in sharp focus. Of course, it's their first face-to-face meeting since Trump got back into office, and I just wonder what the readout was from that meeting.
Yeah, we just saw Foreign Minister Wang Yi actually walk out of that meeting room about slightly over half an hour ago. We don't have any readouts from either side yet, but when Wang Yi walked out, we were shouting a number of questions at him. He didn't take any questions from the press. He nodded and smiled at us and walked straight out. We were not allowed to follow him out. The security was kind of blocking us. So no information yet. I guess the only point of observation that I have now is the two men met for almost exactly an hour, which tells you that, perhaps that talk wasn't so exuberant that they would want to, overrun the timing allotted. It was pretty much, just making use of whatever time that they have, very on time, and then they left. We know that Marco Rubio mentioned ahead of this meeting that he was planning to raise the issue of Russia with Wang Yi. He said China has been offering as much help as it can to Russia without getting caught, and this is something that the U.S. takes takes issue with China on. And this coming ahead of President Trump's announcement that he plans to make on Monday, possibly something about sanctions on Russia. Of course, the big question is whether or not there will be secondary sanctions on countries like China that has been buying LNG and oil from Russia. And of course, the other big question is the question of whether President Trump will be visiting China anytime soon. Marco Rubio didn't really say whether that was on the agenda. That's something we really want to find out, whether they talked about that, how much progress they had in laying the groundwork for that.
OK, and Kasia, meanwhile, we've got Vietnam actually raising its concerns about the deal that Trump says was agreed with Vietnam, that it agreed, he says, to this 20% tariff, but it says it wants a lower rate. Is it actually likely to come down that rate, given that he's now raised the global tariff to 15 to 20%?
Indeed. So initially, Vietnam was one of the very few countries that managed to secure some sort of an agreement with the U.S. But now Vietnam saw that President Trump is also mulling a 15 to 20% blanket tariff, so on all countries that didn't reach any sort of an agreement. So obviously Vietnam wants to come back to the table. But remember, the U.S. is still negotiating with almost 200 countries. And President Trump has now said several times that he is kind of losing patience, that it's too much, that he will just send around those letters and set the tariff rate. So even if Vietnam wants to talk, I'm not sure what the outcome will be. I mean, but again, there is still plenty of time. President Trump set this new August 1st deadline. He has moved those deadlines several times before.
And Kasia, if the point of cranking up tariff deadlines before August 1st, even if that deadline moves again, is to try and force other countries into trade deals, where do we stand at the end of the week in terms of who's most likely to be next to sign a deal?
That's a very good question. I think the EU is out there cruelly still negotiating. I think India is also there. I believe that Secretary of Treasury and Secretary of Commerce Howard Lutnick will travel to Asia, to Japan next week. So clearly Japan is on their mind.
And Min, you talked about some of the other geopolitical issues that have been raised between Rubio and his Chinese counterpart here. Russia, of course, in focus. How close does it look like we may be to a Ukraine ceasefire, given the context of the discussions that are happening where you are?
The U.S. Secretary of State Marco Rubio also
that is
met
something
his...
that...
Apologies, Min, it would be lovely to hear what's going on there in the perspective from Kuala Lumpur.
Yes. Well, the Ukraine war has been going on for quite a while, and I think, China has been very careful about avoiding additional sanctions by not sending additional arms. They have also said that they are cracking down on those dual-use equipment that are being sent to Russia. But, Rubio had a meeting with Sergei Lavrov earlier this morning as well, and he came with a warning that more sanctions could be headed for Russia. The U.S. is introducing, or at least the Senate has been introducing, a bill that could potentially sanction countries that buy Russian petroleum, LNG, and oil products. So that is something that I'm sure China would be very concerned about if the threat is going to hit them directly. But, there are so many other issues between U.S. and China to talk about, not least of which, of course, is the trade tensions, although that is where Marco Rubio doesn't really have a lot of power. Scott Bessent has said he's going to speak with his, or meet with his Chinese counterparts in the coming weeks. But other issues, including the Taiwan issue, which is always a red line that China has taken up with the U.S. And there is also the South China Sea issue, the export controls of high-tech equipment, a lot of these things. But again, it's the first time that the two men are sitting down to meet. The fact that they are meeting at all is a good sign that at least relations is perhaps warming up a little bit, because the two men had a chance to meet in February at the sidelines of the UN Security Council meeting, but they didn't take that opportunity then. So the fact that it's happening at all is quite a breakthrough. But as to whether or not there is any forward movement on specific issues, I think that's a very high bar. We'll have to see what comes out from the readouts later.
Yeah, a significant meeting, but what the market really wants is that Trump-Xi meeting, isn't it? But Min Lo, we wait for that. And Kasia Klimasinska, thank you both so much for that team coverage. Coming up on the programme, a look at what else is making headlines around the world. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in New York. Let's look at your front pages now. We'll look at what's making headlines around the world. First up, the New York Times. Kerr County, Texas had flagged the need for a flood alarm months before the devastating tragedy, it turns out. A report by FEMA in October stated that it was likely the county would experience a flood event in the next year that could result in, quote, increased damage, injuries or loss of life. And officials noted that a flood warning system could be a solution, but none had been installed. Next up, let's look at the Wall Street Journal. They splash on a report that the investigation into last month's Air India crash is focusing on the actions of the jet's pilots and doesn't point to a problem with the Boeing 787 Dreamliner so far. Now, the preliminary findings indicate that switches controlling fuel flow to the engines were turned off, leading to an apparent loss of thrust shortly after takeoff. Family members of both pilots declined to comment to the Journal. And on the front of the Financial Times, the US State Department has notified its staff that it's going to fire hundreds of US-based employees in the coming days following the Supreme Court's decision this week. The Trump administration's plan would eliminate about 15% of the department's workforce. This is according to the department's spokesperson. And the reduction is part of a wider effort by the White House to eliminate tens of thousands of jobs across government agencies. So those are your front pages. Coming up, we're going to digest the risk landscape in geopolitics with Lindsay Newman. That's next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Lizzie Burden with your Bloomberg Brief, standing in for Danny Berger. Here's what you need to know. More tariff tension. President Trump threatens a 35% tariff on Canada, along with blanket levies of 15 to 20%. Retreating from a record, US equity futures slipping as the president ramps up his trade agenda. And prepping for an announcement, President Trump plans to make a major statement on Russia on Monday as he mulls sanctions on that country. Well, good morning to you if you're just joining us. And it looks like this market just cannot resist egging on the president. We had the S&P hitting another record high yesterday, helped by those Delta earnings. And then the president saw that and slapped even higher tariffs on Canada of 35% and the rest of the world. So look, now Wall Street futures are inching lower again as we head towards the open. But how long before stocks get back on their feet? We had JP Morgan's JB Dimon saying that this market is complacent. If you look over to your Treasury space, we've got yields higher across the curve today again for all the concerns about the deficit, about tariffs. You had that 30-year bond auction going off without a hitch yesterday. And take a look at euro dollar. It's on the back foot again today. The dollar up again. So the greenback taking on its role again as a safe haven in these uncertain times. It seems to be a pattern, but we'll discuss in just a moment. That's your broader markets, but let's look at some of the individual stocks to watch with Joe Easton. Hey, Joe.
Hey, Lizzie. So we're seeing some strength in Levi Strauss today after the Levi jean makers earnings last night, beating expectations, and analysts saying actually there's more to run in terms of where the outlook is going for the company. Now, the company is touting the double denim trend, which I always thought was a bit of a fashion faux pas, but kind of showing how behind I am on that. It's the head-to-toe denim trend boosting Levi's, and the stock up 7%. At the moment. Then we've also got drone stocks in focus. Trump and Hesketh looking to deregulate the sector and make them more widespread in terms of in different sectors in the US. And we're seeing a boost in Redcat up 14%, Kratos gaining 4%, and AeroVironment as well. Both of those getting a boost. Then moving back to fashion here in Europe, weakness in luxury goods stocks today, particularly Kering. The Gucci owner set to see another decline in earnings, according to analysts at Goldman Sachs. Bank of America also out with a note today saying they're very worried about the outlook for luxury goods stocks. So we're seeing all of them declining here in Europe. Keep an eye on those as the trading progresses today, Lizzie.
All right, Joe. I think you could pull off double denim. It looks good with a tie, in my opinion.
I'll give it a go next week. Stocks to watch.
I'll hold you to it. Joe Easton, thanks for all your work this week, Joe, with our stocks to watch. Now, on the broader markets, let's turn to Noor Al-Ali, Bloomberg's Markets Live editor and strategist, because, Noor, I mentioned about these dollar moves. It looks like a safe haven again today. Should we read into this pattern?
I'm afraid not, Lizzie. Look, I mean, if you really try to zoom out in the past few days, you'll actually see that complacency that you've talked about, that Jamie Dimon's talked about, even showing up in the dollar, really just trading a little changed, even though if it's up a little bit today, you know, a lot of those moods, even if as we see the dollar boost itself in recent sessions, in reality, though, that risk-off mood that we've been seeing, more realistically so, traders and investors are hedging against further downside. There's also some, you know, if you look at the analysis, the dollar now falls twice as much or, you know, more often than with stocks than it did before. So that really points to the fact that it's trading more as a risk asset and really a source of that volatility than a hedge.
And just talk to us about Bitcoin as well, Noor, because is it going to go higher from here?
Look, I've done some analysis in the past few sessions. What's interesting about this rally, obviously there's a lot of policy support coming in from the White House. You know, those campaign promises that we heard from Trump for the bulls are finally coming to fruition, and that's something that's boosting Bitcoin to records that we haven't seen before. If you look at open interest, while it's soaring, it hasn't reached that peak that we saw back in December, because the moment that open interest peaks, as we saw in December, that's when it tends to fall back, and that's when we see a pullback, at least in Bitcoin. For now, though, you are seeing soaring demand in ETFs, you are seeing open interest rise, you're seeing that institutional backing really come into cryptocurrencies, not just boosting Bitcoin, but also altcoins. So this rally seems to be the only thing that's moving markets at the moment in a broader sea of complacency, as we've just discussed.
All right, Bloomberg's Noor Al-Ali, we thank you so much for that update on the markets. But I want to take a step back from the markets and survey the current risks when it comes to trade and geopolitics as well. Lindsay Newman, who is geopolitical risk expert and columnist for GZero Media, I'm pleased to say, joins me now. Morning, Lindsay. We were just talking to Noor there about the S&P hitting this fresh record yesterday. Jamie Dimon saying that the stock market is complacent. But I wonder whether that complacency is emboldening the president to prove that he doesn't always chicken out.
Absolutely. Thank you so much for having me on, Lindsay. Look, we know that the Trump administration this time around is ambitious. I've been saying this for months. This is not your Trump 1.0 foreign policy. There's no stone that's being left uncovered. We've had a lot of irons in the fire. If we were talking not even a month ago, we would be really focusing on Israel and Iran. Last week, we would be talking about the big, beautiful bill. But this week, it's all about Ukraine and really about the global trade agenda. As you say, there's a talk everywhere about uncertainty that was being phrased as radical uncertainty. The U.S., the greatest export coming from the U.S. right now, the most notable export coming from the U.S. right now is political risk. The president likes to call this keeping the U.S. in the driver's seat. And what that means for global stakeholders is they're not really sure what's coming next. They're quite nervous about it. They're hoping that they can just ride the waves and that the waves aren't too big. And when they come their way, they can quickly exit the strategy. But that's cold comfort when we're talking about an effort to reorganize the global financial system, the global trading system, and really big questions around security.
Well, just as we're speaking, Lindsay, Marco Rubio, the Secretary of State, of course, is speaking in Kuala Lumpur. So we've got some pictures here of this address that he's giving. Of course, as we were just discussing with Min Min Lo, this is the first time that he's meeting his Chinese counterpart this second Trump administration. So we'll keep listening into that while we're talking, Lindsay. And let's just focus in on one particular tariff that we've heard about this week, and that's copper. Because as we look at the US domestic capacity for copper production, it really is years away from being able to stand on its own feet. So when you talk about uncertainty, do you think that actually it's inevitable that Trump is going to chicken out when it comes to these 50% copper tariffs?
What Trump is looking to see here happen is by putting these numbers out, putting a proposal of 50% tariffs on copper, overnight raising the possibility of the global tariff rate from 10% to 15 to 20%. You know, the numbers matter. But what Trump is really doing here is putting forward an anchoring position. He's naming his price. He's saying, this is my ideal target, 50%. Whether we land there or not is not necessarily the objective. The objective is to change the conversation and therefore as a forcing function to change behavior. We've seen this in the long run with, for example, NATO security spend, right? 2% was a target that he put out there years ago. Everybody in Europe thought, how are we going to reach that? Now we've committed to 5%. We see the same thing with Canada tariffs. It's caused Canada to rescind the digital service tax. They've sort of been a victim of their own success there because now Trump is threatening 35% tariffs on Canada overnight. These 50% tariffs on copper are because Trump knows that copper is key to the future of electrification of cars. It's a key mineral for the future of energy electrification and modernization. It's going to be coupled with further efforts to deregulate, to increase domestic mining on copper. That's a long game that he's been aware of and talking about for multiple administrations here. Yeah. But it's not about the 50% number. It's about changing the conversation.
Well, you mentioned the digital services tax. Do you think that Mark Carney is having a bit of regret now that he's thinking, oh, I gave Trump an inch and now he wants to take a mile? He's upped those tariffs again. Maybe do you think Trump wants some ground given on USMCA?
Mark Carney must be thinking, how do we get it right here? Justin Trudeau tried cooperation and then he tried confrontation. Mark Carney now is the incoming PM with a mandate coming in, has tried to be cooperative towards Trump, tried to be collegial and lean into the fact that they are very close allies, that the trading relationship is key to both markets. He must know, though, that Trump has the USMCA renegotiations in mind. And again, it's about the 35% number was a target that was put out there. It will have the effect of chilling the headlines and chilling the Canadian political apparatus at the moment, but it's not going to be the landing point. It's about shifting the perspective and changing the behavior that will come from it.
And Lindsay, we've just heard from Rubio there saying that the odds are high for a Trump-Xi meeting, that they've got a very positive relationship between the two of them. When do you expect that? How optimistic are you about the next step in this relationship that we've seen progressing in Geneva and London and now in Malaysia as well?
There are certainly positive indicators about the reopening of channels of conversation, of dialogue between the sides. But we have to be cautious about this. Both sides are being quite thoughtful and careful now about economic security as national security. We know, for example, in response to the high tariffs that have been imposed against China, China has responded by export restrictions on rare earths, which are going to be a huge choke point for a number of supply chains of importance in the future, now and in the future. So it's a cautious optimism, but this is a long-term strategic, we used to use the phrase for years, strategic competition. These dynamics have not abated.
And meanwhile, the president says that he plans to make a major statement when it comes to Russia on Monday. He's expecting the Senate to pass these sanctions. Do you expect the president to use these sanctions?
Yeah, so we know that Donald Trump had hoped to bring a conclusion to the war in Ukraine very quickly. He'd initially said day one, then over time had moved that timeline to 6 months. We're at 6 months. And the administration must be privately frustrated. And we're seeing this spill over into the public. They're realizing how sort of intractable the conflict is, what the limits of relational diplomacy, relational foreign policy is. I do expect that this big announcement will be based around the potential legislation in Congress, congressional action, of a sanctions bill. And it's not so much about whether they will be applied, it's whether they will be applied and then implemented. And that's been a big question, how much this administration has sort of loosened the reins on implementation and constricting Russia's movement and ability to retain revenue around its energy markets and energy resources. And that will be the key lever that the administration will look to pull.
Well, yeah, the president must be incredibly frustrated that his goals of peace haven't been met yet. He says as well that a Gaza ceasefire is close. What's likely to come first, do you think? Peace in Ukraine or peace in Gaza?
We know that Trump has his eye on that Nobel Peace Prize. It's a long-standing ambition of his. He says his greatest legacy is going to be as peacemaker. So he's looking all around the landscape, and he sees that Russia has, again, the Ukraine conflict is quite intractable. If I were a betting lady, which I'm not, I'm a political risk analyst, but if I was a betting lady and looking into a crystal ball, I would think that the dynamics are closer on Gaza. The conversation is quite active. We know that there's a potential for another 60-day ceasefire. And the dynamics in the Middle East have just dramatically changed in the last year. We have a change in regime in Syria, a weakened Iran. Most of Iran's proxies have been quite degraded, although we've seen some recent action, again, by the Houthis in and around the Red Sea. So those dynamics feel like they could be more easily resolved, but it's an incredibly difficult conflict over there as well.
Well, Lindsay, you're talking to betting markets, so your analysis is always appreciated. Lindsay Newman of GZero Media, we thank you. Have a great weekend. Now, to other top stories trending on the terminal this morning. The UK economy shrank for a second straight month as companies and consumers struggled to bounce back from these US tariffs and UK tax increases. GDP declined 0.1% in May, according to the Office for National Statistics. Chancellor of the Exchequer Rachel Reeves said that the latest figures were indeed disappointing. Elsewhere, Brazil President Lula da Silva insisted that his country can survive without trade with the US and will look to other partners to replace it. This comes after President Trump threatened 50% tariffs against the nation. The US is Brazil's second largest trading partner, following only China. And here in New York City, Mayor Eric Adams raised more than $1 million for his re-election effort in a single night at a fundraiser in Manhattan. His campaign's gotten a boost from donors and business leaders opposed to the Democratic nominee Zohran Mamdani. Michael R. Bloomberg, of course, the founder and majority owner of Bloomberg LP, has endorsed Andrew Cuomo for mayor. Well, coming up on the programme, Tesla targets new states for its robo-taxi expansion. Details on where it's heading next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Verdon in New York. Now, Tesla is planning a robo-taxi expansion, aiming to bring driverless cars to California and Arizona on the heels of last month's rollout in Austin. Of course, Grok 4 dropped earlier in the week, so let's ask Matt Bloxham, senior analyst for Bloomberg Intelligence, whether Elon is firmly back in the driver's seat. Matt, what do you reckon?
Yeah, I mean, I think he's definitely in the driver's seat. I guess the question whether he ever left it, but I think the question for shareholders right now is whether he's definitely got both eyes firmly on the road ahead for Tesla and not distracted by, other projects, not least SpaceX and his political ambitions. Obviously, we've heard some pressure recently from shareholders that the board needs to kind of apply more pressure to Elon to be much more focused on Tesla. And there's even been some suggestions that maybe it's time for him to step down as CEO. And obviously, that's worked quite well for SpaceX. So, yeah, definitely you can see his influence coming very much back to Tesla, and they're really diversifying away from just the cars into robo-taxis and beyond. So I think there's going to be a lot of interesting announcements in the coming months to do with Tesla as he kind of gets back into that kind of regular mode of operation.
Yeah, a pretty bumpy ride for the stock price so far this year. And similarly, you've had pretty spotty demand for Apple over the past 2 years. And we know that they're planning this ambitious pipeline of new products for release in the first half of next year. Do you think that these models are really going to be all that different, Matt?
I think that certainly the lineup they've got for next year, which is kind of low-end iPad and the cheap iPhone, the 17e, maybe not that different, more incremental product developments. Obviously, I think that the big focus is really on the full launch, which is really the spotlight for the new iPhone 17, which I think is going to be a bit more of a significant launch. And there's talk of the iPhone Air, a kind of very thin version of the product. So I think to some degree, they want to sensibly phase their products and really kind of give the iPhone 17 enough kind of its own space, if you like, to kind of really drive sales in the near term, and then balance that out with other products into next year. And also we've got the whole tariff situation, which continues to be very uncertain. And I think with some of these products, there's perhaps a question mark for them about where can they price these or where should they price these, depending on how much the tariffs end up being and when they kick in. So I think there's certainly some uncertainty there for Apple in terms of their pricing strategy for some of these products in the next 12 months.
Yeah, it could be difficult if that coincides next year. Matt Bloxham of Bloomberg Intelligence, good to see you. We thank you for that analysis. Now, fewer tourists are expected in New York than last year, this summer, which many have been attributing to President Trump's trade war and his aggressive immigration policies. But steaks, burgers and martinis, the New York influence, is pervading London, which is good news for me because I'm going to really miss it when I go home next week. But joining me now is Bloomberg's food editor, Kate Crader, to tell us why this has been happening. Kate, are there a couple of dishes that epitomise a New York City menu that Londoners are liking?
It's a really good question, Lizzie. There's, you think steaks, oysters, martinis, which we can talk about separately, whether that's actually a New York product or not. But cheeseburgers, one big thing you can see now on prime restaurant menus is cheeseburgers, and that is definitely not something you would have seen on a London menu in any time in the recent past.
And as I learned over a fabulous lunch with Tom Keane yesterday, Kate, it's not all about the food. What else makes for a New York dining experience? Because I know the service can be fabulous.
It's a really good question also. It's got to do with energy. When you go a New York restaurant, there's a lot of spontaneity. They like walk-ins. Waiters will talk to you and have a conversation. In the UK, people traditionally have gone out to have a culinary experience. They want to eat something they couldn't make at home. The kind of New York food that you're seeing a lot of now is really accessible. I mean, of course, you can make a roast chicken. Of course, you can make a cheeseburger at home. But here you get to have it and you get to have a conversation. You feel like you're entertaining. It's a bit of a party, or it's a party atmosphere. And that's exactly the energy you're talking about.
Kate, there may have been martinis at lunch. I've got a question for you. Did it really originate in New York City, the martini, or is Tom Keane telling me porkies?
I will never speak back to Tom Keane. There's the history around it. It's a bit fuzzy, but supposedly it was created at the Knickerbocker Hotel, which is a New York hotel. They're very, very well made here, as anyone who wants to say James Bond will attest to. But the history does supposedly go back to New York, and there's so many martinis here now. You'll see them when you come back.
All right, Bloomberg's food editor, Kate Crader, thank you so much. I was going to ask you for your restaurant recommendations for the weekend, but the production team reminds me there's no need. All I need to do is check out Dine Go on the terminal for Kate's recommendations, wherever I am and wherever you are around the world. Now, let's take a look at other stories. We'll do that in just a moment, but this, for now, is Bloomberg. Let's take a look at what else is ahead today. The president is going to be meeting with first responders and families who've been affected by the floods in Texas. And then at 1 p.m. Eastern Time, we're going to get fresh remarks from Chicago Fed President Austin Goolsbee. Also at 2 p.m, we'll get the latest figures on the federal budget balance. So plenty to be watching out for on the calendar there. But in terms of your micro movers, just take a look at these. So we've got Levi Strauss on the board here, up 8.4%. That stock surging after boosting its full year revenue guidance. We're also keeping in mind drone stocks this morning. And for the other two market movers this morning, Red Cat rising over 10% in the pre-market. So keep an eye on all of these throughout the day. But that's it for your Bloomberg Brief. Surveillance is ahead. It's been a pleasure being with you all week. And Danny Berger will be back with you on Monday. This is Bloomberg.